Hey, this is Brett and Braiden with Fulcrum Home Loans. This is your weekly update. It's October 13th, 2022. The first point is inflation. So we just got the most recent numbers. The consumer price index actually decreased from 8.3 to 8.2%, which sounds good. That index includes food and energy, but the bigger number was the core reading, which actually increased from 6.3 to 6.6%. That strips out food and energy. And that's a number that was a little bit unexpected. We expected a peak of inflation sometime around the fourth quarter, and we think that we're pretty close to that point. So yeah, it's an uptick, but we're looking forward to this. We think this month, maybe next month, will be the peak, and then that will start to go back down. And that has a lot of relevance for what the Fed is doing. As a result of that, the Fed will definitely increase 75 basis points at their next meeting in November. So that's in the books at this point. So yeah, it's an uptick, it's an increase, but we think we have to get to a peak sometime, and we think that we're right about that point.
Point number 2, unemployment. So the unemployment numbers came out today as well. And this is a weekly jobless claims report. So it comes out every single week, you get to track it. And that's one of the things the Fed keeps talking about inside their meetings, is they actually want this unemployment number to start ticking up to show that what they're doing is actually working. Last week, I think we added like 28,000 jobless claims last week. And this week we added another 9,000. We're up to like 228 a week or something like that. So unemployment rate, we have 2 weeks in a row where it's rising. If that continues to happen, I want to watch that number pretty closely these next couple of weeks. If that continues to happen leading up to the Fed meeting at the beginning of November, that may influence their decision a little bit, showing that what they're doing is working, and it'll be interesting to watch their narrative and see if it changes at all.
So all of these things kind of sound like bad points, which in a way that they are. It's also, in my opinion, a turning a corner.
Yep.
You know, we're seeing things happen, seeing things peak, and what that means is that there's light at the end of the tunnel. The Fed rate increases are going to stop relatively soon. We do expect lower rates sometime next year. The unfortunate reality is you're feeling and seeing the pain right now. So you don't feel like there's light at the end of the tunnel, but that's what you have to do. You have to forecast. You have to look into the future to see what's going to happen. And so right now we're seeing the pain. Honestly, we're seeing interest rates increase, get to their highest level in many, many years, inflation at its highest level, the cost of goods going up, et cetera, that's painful. But if you look at the forecast, if you look at the economics of it, we know at some point that's got to turn a corner, and we feel like that corner is really close to where we are right now. And that leads us to our last point, our third point, which is the next 15 months, what you do will determine your success in the next 15 years.
Robert Kiyosaki, who wrote Rich Dad, Poor Dad, I love watching and listening to him. And he said he made more money in 2010 and 11 than he ever had in his life. Not because he actually made money, but because he capitalized on the 2008 crash and started investing as we started coming out of that crash. And in my opinion, that's exactly what this quote means. We've got 15 months where we can utilize it. We can pay attention, watch the markets, not necessarily try to time them, but take advantage of the markets we're in and set yourself up, because if you do what's right the next 15 months, the next 15 years will be pretty good for you. I mean, the most direct one is to buy when everyone else is selling and sell when everyone else is buying. That's a famous saying inside of trading, is that you want to buy when everyone else is selling. And so if you've got extra cash that you've set aside to set yourself up for this recession, you can start trickling it into the markets. It's impossible to ever perfectly time the bottom, but we know we're 25, 26, 27% down right now. So capitalize on that. If you want to buy real estate, you can buy real estate, but start applying your capital, and then also be smart with your adjustable rate debt. If you've got credit card debt, you're probably being charged 18 to 20% interest, and that's just going to keep going up as interest rates continue to go up. Try to pay down high interest debt, try to deleverage yourself from that stuff, and then go apply that money into better debt like mortgages or other stuff.
I would say for the professional, the next 15 months is an excellent opportunity to get your systems and your processes and your relationships in order. You know, if things are a little bit slow, take the opportunity to strengthen relationships that you have with referral partners, with your clients, with past customers. Get in front of them, be top of mind, take the opportunity to fine-tune your process, make your process better, improve your efficiencies, et cetera, et cetera. So it's a great time to look at your business, to improve it. When 2020, 2021, we were all running around like our heads were cut off, just trying to get the deals done that we had in front of us. Now's an opportunity to improve that process, make it better.
Yeah.
And that's Brett and Braiden with your weekly update.